Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. And we're going to be looking at several different events. A lot of red on the screens today because of just the perception that things are going to go down, but there may be some great buying opportunities here. And let's take a look. We'll start with Apple because that's what we were talking about yesterday. Our poll showed that only about 13 or 14% of you would actually consider buying an Apple Watch, which is sort of small, and I think Apple's come out to the game a little bit late here. I think they're expensive for what they are. When you have comparable smartwatches like Pebble that sells for maybe half the price of an Apple, and it does pretty much everything that an Apple does. So I think there's it's an uphill battle for Apple to have a really successful product with a smartwatch. But let's take a look at the stock, what's going on. What was interesting to me is that yesterday was right here. We actually had an exit signal on Apple at 125.76. That's when they put on their presentation. Very, very unusual. And of course, we're down again today. But a couple of things you want to look at with Apple right now. One is the major trend continues to be positive, and this is the trend that we've seen from $66.53. Okay, there's the last turnaround right here, 125.76, which is right here. And we have on the screen a Bollinger Band. Now, the key with Bollinger Bands is this, is that when you get to the lowest extremities, and we'll be showing you this throughout, they tend to be opportunities to be a buyer if the trend is up. Not all the time, but for the most part, it tends to come back into the band. So it'll go out of the band, it come back in the band, and so forth and so on. So if it gets to the upper levels of this center line, it tends to be in a very strong trend, and you can see that we've broken below that trend. So it's now in a trading range, which is right here, 55, with our trade triangles. And we're looking at two things. One, the bottom of this Bollinger Band, and also the RSI, which is this indicator right here. We're at the 61 level. If we get down to these levels, 50, 51, this is where support should come into Apple, right around these levels here. So I think between 125.40 and let's say 123, I think that's pretty much where Apple is going to be finding a sweet spot and support. So let's move on. Looking at the S&P 500, again, we have a weekly trade triangle that kicked in today. We are at the bottom of the Bollinger Band. However, you should be out of the market if you're following our trade triangles, and we are below the 50 line. So it looks like we're going to see a little bit more of a two-way market in this street. When you get a conflict between the monthly, which is the big trend, which is still positive, and the weekly, it means you're going to see more of a two-way market, even though we've had a fall today. It'll be a little bit more choppy. So let's go on to the Dow. The Dow, again, just popped below the Bollinger Band line. You can see that right here, and it's just below the 50 line. So that again indicates more of a trading range, but I would suspect we're going to see some sort of form of support coming in where we are right now. So watch that very carefully. Now on the Nasdaq, a little bit of a different picture here. You're still on the 50 support line, which is right here, and you are really at the area where we're just below the center line of the Bollinger Band, and this is where support should come in right around here. But we are below the parabolic, so I would look for more of a two-way market. Our weekly, as I say, is red, which is a conflict to our monthly, indicating you should really be on the sidelines in this index at the moment. The euro continues to fall, 107.52. That's a new low for the euro against the dollar. And how low can it go? Well, people are talking about parity. Well, I've heard them talk about parity before. And usually when you get that type of talk, you sort of get a short covering rally, which I would not be surprised to see in this market. We are very heavily oversold. You can see that we've gotten down to these areas before, and we had a modest rally, not very much, but a modest rally. We're getting close to those areas again. We may just sort of wander off like this and then boop, have a little pop. So let's see how that plays out. But the trend clearly has been negative for the euro against the dollar from 135.86, currently trading at 107. So it's been a huge play for us. Even on our weeklies, huge play, big profits for our World Cup portfolio. Now gold is looking very interesting in my mind. We're back down to a support area that's really helped in the past, and that's, if you just sort of, let's say this is where we are right now, and just go further forward, this is where we've had areas where the market's found support. Again, we are at a very oversold condition, which means it doesn't mean to say it can't go lower, but the reality is it is under pressure. Now we have this formation that's forming right now, which could be a hanging man, or it could be the bottom. When you have a large, I'll just draw that very quickly for you. When you have a line that goes down like this, and then you end up at or close to the highs for the day, like this, which is where we are right now, it can be an indication that you're seeing a bottom in this market. Plus, you're below the line that you're seeing here, indicating that eventually this is going to pop back in to the Bollinger Band somewhere along the line. Just like it was out here, it came back up, and the center line then becomes resistance. So again, longer term trend is up, intermediate term trend is down, and you've got the short term daily trend is also down. So you've got more of a trading range than a strong downtrend. A strong downtrend, we want to see this also red. So let's see how that plays out. Now crude oil, which is very interesting, is just continuing to go sideways. You can see this, well, we talked about this sort of this big sort of box it's forming, and it needs to get out of that box. It's going to do anything. And again, we're sort of twiddling along the 50 line, just popping over occasionally like we did here and here. We need to get a stronger trend either on the downside or the upside. But again, it's a mixed picture. If you look at this commodity and you see the monthly is still down, indicating lower prices, the weekly is positive, indicating higher prices. So you have this conflict. Again, it's a trading range, and that's what this big box represents. That is a trading range for now. Now this is interesting. This is a ETF. It's FAS. It's a 3 times directional ETF, a bear. So if you think the market's going to continue to go down, you may want to look at this. Now, a couple of things I want to share with you today. One is you have all of the trade triangles right here, plus 100. That's a strong upward trend. You also have a weekly that came in just today at $12.80. It's $12.86, so very marginal there. But you also have the potential that this is a pretty important double bottom. If that's the case, then this will be a pivot point. And if we were to get over this line, which is, let's call that around the 15 level, from where the level is here, 12, then that would take you up to 18, somewhere around here, which gets you all the way back to this area here. So let's see how that plays out. But if you want to be a little bit defensive and protect your portfolio, you may want to buy this particular FAS. It's 3 times the leverage, which makes it a little more volatile, but again, it looks as though it's made a turn. We have all of our trade triangles in place, so that's maybe what you should be looking at the moment. I'm Adam Hewison for Market Club. Thanks for stopping by, and let's see how those Apple Watches sell, and let's see how the market plays out in the next few days.